What's happening right now is arguably worse than the 2008 housing market crash. What you see behind me is a graph of the sale of homes in the past 30 years. Look at the 2007 column and compare it to 2022. Then look at the 2008 column and compare it to 2023 and 2024. Looks eerily similar to the great 2008 financial crisis, doesn't it? The housing market is crashing before our very eyes. There are less home sales happening right now than during the 2008 financial crash, and I'm going to explain why this is just the tip of the iceberg.
Iceberg, right ahead! It's gonna hit! Get back!
I believe this is a signal that we could be entering into a recession any month now, as inflation is also back on the rise again. This is going to be devastating for a lot of families that recently bought houses, and I'm going to break this down later in the video. I want you all to make informed decisions, so let me explain to you where the market is heading and what you guys need to know. So a large issue here, after 11 consecutive rate hikes, the Fed has recently dropped the federal funds rate by 0.5 percentage point.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point.
I'm sure you've all seen this on the news by now, but you might be thinking, finally, this is what the market needed. But you would be sadly mistaken. This was actually a huge mistake, and the way the market reacted proves this. Articles like these have been popping up non-stop since the last rate drop, and it proves the big blunder that Jerome Powell made. Now, I know there's an election coming up, so there was a political motive behind it, but it doesn't make what they did right. First, let's talk about why inflation is back on the rise again and what caused it. The current annual inflation rate is back up to 2.4% again, which hasn't been seen since February of 2021. Prices of goods are still 21.4% more expensive than when the pandemic hit back in February of 2020. Yet pay has not increased at the same level, so there's a huge disconnect there. This accelerating wage growth is not going in the right direction anymore, as you can see from the graph on screen. This is the first reason why it was such a huge mistake to reduce rates. Inflation was nearing the Federal Reserve's 2% target, so the Fed felt comfortable enough to reduce the rate. But what happens when you make it cheaper to borrow money? Extra money enters the US money supply, meaning your dollar is now worth less because there's more of it, causing the cost of goods to actually increase to make up that difference. Are you wondering why your bread and eggs are more expensive now? Well, that's why. Now, let's shift our focus for a second, because what happens when you start to drop the federal funds rate? The mortgage rates also drop. Now, there's no federal mortgage rate, but it follows really closely with what the central bank does. So let me explain how this works. If a lender thinks a rate drop is coming or a rate drop has already happened, they're going to be more confident to give out money at a lower rate, aka cheaper loans, because it's now less expensive for these lenders to borrow money from the government, so they feel more comfortable giving you and me a better deal. Now listen to this, because this gets juicy. Typically, every 1 percentage point the mortgage rates drop, 3 million buyers enter the market. And yes, there was a temporary spike in mortgage loan applications, as you can see from the graph, because we got really close to 6%. But it quickly fell again once buyers realized one simple key fact. Prices of homes are still too high. I want you to pay very close attention to that, because that is the key underlying fact of why the housing market is so screwed up. It's high prices. And you might think you have a simple solution. Well, if the prices are too high, why don't we just lower the mortgage rates to make up the difference? Well, that's an awful idea, and let me explain why. But first, in some states, we're still at record high prices, and other states, we are going down. Regardless of what state you're in, we're still about 20 to 40% overvalued. As you can see from the chart on screen, this is how much home prices have fallen since the 2022 national peak for the top 10 cities. Yes, cities like Austin, Texas have dropped by 20% and San Francisco 9%, but as you can see, most have not dropped by enough yet to make buying a home affordable. At these astronomical prices, mortgage rates would have to drop back down again to at least 3% for it to make sense for you to actually buy a home. But you better pray that doesn't happen. Let me explain why dropping the rates that low again would have a devastating effect on the housing market. Low rates is a big reason why we're in the position that we're in now, because the Feds dropped rates too low too quickly. During the pandemic, this caused millions and millions of buyers to enter the market, just gobbling up as many houses as they can at a frenzied rate. They wanted to lock in that historically low 3% mortgage rate. Because of that, inventory evaporated and prices reached all-time highs. We had houses that were receiving 50 offers. We had bidding wars. We had people waiving inspections, basically giving up any right just to get into a house. The consequences of this was prices exploded and inventory reached record lows. But the government knew they couldn't sustain this any longer, so they started to raise interest rates back in 2022 until we hit about 8%, then the frenzy stopped. But by that point, it was already too late. The damage had been done and the housing market was decimated. So if the Fed were to do that again and bring rates back to 3%, the same thing would happen all over again, except this time the prices would be starting at overinflated price points. The prices would go up so high that you can kiss your dream of owning a home goodbye forever. The housing market would never recover and it would actually be a doomsday scenario. So how do we fix this if they simply can't just drop the rates? Because we sure as hell know that those buyers who bought at 3%, they're not going to be selling their houses anytime soon. Jerome Powell or whoever's in charge of the Fed in the coming years just needs to do one simple thing. They need to increase the interest rates. As of October 2024, mortgage rates are hovering about 6.5%. But if you think that is high, look back to the 1980s, we hit about 18%. Yes, it was a much different time back then, so if we raise rates that high, it would have equally devastating consequences. But I think around 7-8% is actually the current Goldilocks zone. In my opinion, this is the only way that we can dig ourselves out of the hole that our government got us in. You're much better off renting the same equivalent home and saving around $1,500 per month and just waiting for the storm to pass. Over the next 2 years, we need the prices of homes to drop by at least another 20 to 40% so we can have the inventory go back up to pre-pandemic levels or even higher. Prices of homes, that's the biggest factor right now. Once that happens, it'll finally be safe for the Fed to actually start dropping interest rates again, and then it'll become more affordable to buy a home. So I am urging everybody right now, do not buy a house. And yes, I am an active real estate agent, and I know me telling you this means costing business for myself, but this is one of the worst times in America's history to buy a house. If you plan on holding it for the next 15 years, you're going to be somewhat okay, but you're only going to be adding to the problem. We need people to stop buying homes. This way, the market can finally recover. The less homes that are sold, the lower the prices are going to go. Sellers are going to finally realize that there isn't as much demand as there once was, which I'm going to talk about in a second. But first, let me tell you how this is going to affect millions of families that bought a home over the past 2 years. Recently, the National Association of Realtors came out and said that 6% or right around that range is the new normal for mortgage rates. And let me tell you why this is a problem for a lot of people who recently bought homes. There were a lot of people still buying real estate assuming that rate cuts were coming, so they would buy at a high price and just refinance later. But unfortunately, that's not going to happen because quantitative easing is gone. And if you don't know what quantitative easing is, let me briefly explain. QE is when the government makes more money and gives it to banks to help people spend and borrow more. This helps the economy grow by getting more money into people's hands so they can buy things. So all those buyers that bought since the peak of 2022 are right now essentially underwater, meaning their house is now worth less than when they purchased it. They figured that they would be able to buy high and then refinance at a much better rate instead of the 7% rate that they got stuck with. But unfortunately, those low rates are never coming back again, at least for the foreseeable future. So they are now stuck with a house that they simply cannot afford. Now they need to sell their homes at a huge loss. And I'm telling you right now, this is just the start. I just had a client in this exact same scenario take a $50,000 hit. They bought a house back in 2022 as an investment, but nobody could afford the crazy high prices that they needed to positive cash flow. Since the rent payments that she was getting wasn't covering all her monthly expenses, she had to sell the house for a huge loss. These kind of situations are happening right now across the entire country, and unfortunately, we're going to start seeing this more and more. Now, as much as this sucks for the poor families that bought a house within the past couple years, it's arguable that this is actually going to help get us out of the jam that we're currently in. More inventory is going to enter the market at reduced prices. So remember how I was talking about demand softening before? It's because the prices of homes are still way too high. But as more homes become available, the prices are going to naturally come down because buyers are going to start offering less. As long as interest rates stay high for the next few years, this trend's going to continue. The prices of homes are going to continue to fall until it's finally affordable to buy a house again. Fannie Mae found in a survey that before the rate cut just happened, that's what buyers were waiting for, lower home prices. They're also waiting for lower mortgages, which is not going to happen, and higher wages, which is another story. In other words, people are on a buyer strike right now, and it's going to stay that way until the prices of homes fall low enough for people to actually be able to afford their monthly payments. Fannie Mae economists agree, saying that they think 2024 will produce the fewest existing home sales since 1995. So let me break down the numbers to you just to show you how much of a staggering fall we've just had. Sales of existing single-family houses, townhomes, condos have plunged by about 26% from 2018 and 2019, and by about 34% from 2021, according to the data from the National Association of Realtors. In 2023, they fell to 4.09 million homes, the lowest since 1995. In 2024, so far through August, sales are tracking 2.5% below 2023, so it's still going down. This destruction of demand is worse than the 2008 financial crisis when mortgages were blowing up and people were losing their jobs. And 2024 is the second year in a row that this is happening to us, and it's all because high prices. We're going to look back at 2023 the same way we look back at 2008, as the start of a financial crisis. My advice to everybody is to continue renting and saving as much money as possible until the market rebounds. I anticipate it being a good time to buy a house around 2026, so in the meantime, just work on your credit and work on saving as much money as you can for your down payment. If you do have the money to buy a home, don't do it. Instead, put that money into a high yield savings account or a CD. If you're looking to be a little bit more risky and you think the stock market is going to keep going up, then you can do something like a Vanguard index fund like VOO. But I do have my doubts that the S&P 500 is going to continue to rise at this record pace because what they say is always true. What goes up must come down. But that's for another video, and I am not a financial advisor. If you guys still won't listen to my advice and insist on buying a house right now, just make sure one thing happens. Make sure you're not gonna have to sell the house within the next few years, because I promise you, if you do, it's gonna cost you big time. But if you do wanna buy, then at least watch this video above, because I break down all the types of homes to avoid at all costs. All right, that was pretty good, not bad.